Okay, JC, I'm making you the presenter. So looking forward to hearing your voice, seeing your screen, seeing some of those all-star charts that you have on your radar.
How's that, Dale? You hear me okay?
Yeah, got it, JC.
All right. So
Very nice to meet you.
Likewise. Thank you. Thank you for making this time. My schedule's been a little all over the place.
Yeah.
So I appreciate you working with me. I'm definitely glad to be here, talking charts.
Yeah.
Listen. I'm open-minded.
I love your Twitter description. You build puzzles because the market is like a jigsaw puzzle, isn't it? Trying to put all the pieces together.
It's the most fascinating puzzle I've ever tried to put together. I was a puzzle kind of kid, I suppose. Maybe just like anybody else, but the fact that it's never complete, this puzzle that we call the stock market, and there's always new information and new data. So you're constantly having to reevaluate any prior thesis based on new data that's coming in, right? Which it just doesn't stop coming in. So there's always a period of reevaluation that I think that we all need to be doing. Some do it more responsibly than others, which seems clear. So I pride myself on consistency, I suppose.
Well, I'm glad you brought up that you started as a little boy, because I'm always interested in how someone got involved in this industry and who was responsible and who were their influences. So maybe you could take us back to the beginning of your journey to where you are now. How did you end up in this industry?
Sure. Well, we could take it back to 1982, right? So this is the year that I was born, right? 1982.
Oh, you were born. Were you born in August? That was the beginning of the long-term bull market. August 82.
No, Dale. You see, I'm a leading indicator, so I was born about 6 months prior. So It was kind
of good one. You knew what was coming. You knew you had to get in there, so you were already front running the market before it turned.
Somebody has to, No, I mean, listen, my father, neither one of my parents were, to this day still are not huge market participants. They have their 401k. I was born in an era with 15% interest rate, so
right.
Theoretically, it's funny, I hear my father say there was no reason to be in the stock market. I'm getting 15% at the bank, which is funny because that was precisely the time to be getting into the stock market. So, just really interesting. And my mother is an advertising exec, so neither one of them were really in it. In college, I played baseball at Division I level at Fairfield University in Connecticut. And, I just wanted to play baseball and party with girls. I mean, that's just what it is. I didn't care so much about the, I would think about the future, but I knew that as long as I buckled down and got good grades, that it would eventually, work itself out. I had an internship in Merrill Lynch while I was in school, and that really pointed me in the right direction. I knew I didn't want to work at Merrill Lynch, but I didn't like the big shop, so I knew that pretty pointed me in the right direction.
So did you start off as a Series 7 guy and hit the phones?
Yep, I did that early. I was able to do a lot of things, right? I was on the analyst side. I did some investment banking. I built some hedge funds. So I really got a chance to, kind of do a little bit of everything. But listen, the bottom line was that, technical analysis, it was clear to me that, that's really what set me apart from everyone else. It was very, very clear. And it seemed like I was the weird one, looking at charts.
Yeah, everyone, it was all fundamentals, earnings, and you were visual and you liked looking at patterns. Who influenced you technically? Was it someone like John Murphy, or I'm wondering what books you delved into to eventually we all come up with our own style. That's what Jack Schwager says,
Yeah.
Find a style that suits your personality, but along the way, I know I had influences. I still talk about a 3-drive formation that I learned from a guy in the 70s, J.R. Hill. So who influenced your work?
Well, no question. I'm a John Murphy disciple through and through.
Oh, I guess right.
Yeah.
So that you were into the intermarket relationships too.
100%. You know, a few years ago, I was at an event, and John Murphy was scheduled to give a presentation, and he was late. I forgot traffic or something like that. I kid you not. Had he not shown up, I could have given that presentation for him. And you know, it was funny because I used to always tell my assistant that I'm a John Murphy disciple. I'm a John Murphy disciple. And then after Murphy gave his presentation, she comes up to me. She's like, "Oh my God, you really, really are," you know.
Yeah.
And then Schwager. I mean, there's, you know, I recommend those Schwager books to everybody. You know, I know my friend Peter Brandt reads the Schwager books
yes.
once a year. He reads them again. You know, and so that's I definitely recommend all the Murphy books, all the Schwager books. Even if you're not trying to be a hardcore technician, if you take your portfolio seriously, I mean, start reading those books like yesterday.
Okay, well, thanks for sharing that, buddy. And I did go to your website and your blog, and what a great time to have you on with the market finally coming under pressure. I know your long-term stance is constructive until the evidence changes, and I'd be curious as to what the market would have to do. Yeah, there you go. So you're looking for oversold conditions. So you're viewing this as a long-term bull. You're licking your chops for buying opportunities now, correct?
Yeah, you know, I mean, that's basically been the trade. You know, if you know, last week I even said, you know, instead of reiterating upside targets, instead of, you know, talking about the good things that we're seeing out there, you know, why don't we talk about risk management and really focus on the things that we want to see to really change our perspective? And I kind of laid it all out, you know, some of the things that we were looking at. So if you go to the blog today, go to allstarcharts.com. It was posted this morning. You know, it basically says what we're looking for to change that short-term thesis. And I think a great way to explain it is by showing this chart here. Yeah. This is the S&P 500, 2015, 2016, right? So this was a key. This was our target. This 2110 level in the S&P 500, going back, going back several years. So we knew that our target had been achieved when in 2015, when the market was really consolidating and digesting those prior gains. So the question was, okay, are we going to resolve higher and resume the uptrend, or are we going to roll over? And then as soon as prices broke those lows, you know, call it 2040, that had been support throughout 2015. That broken support suggested that now there was a problem. Now all of that overhead supply was now in place, and sure enough, that later came to be. But one of the things that really confirmed that things had changed from a strategy standpoint, where we were now in a sell any strength environment in 2015, was the fact that we were also getting oversold in momentum. So I use a 14-period RSI. In this case,
I do too. Yeah, I renamed it. I renamed the RSI.
Oh, did you?
Yeah, I call it the real simple implicator.
I like that.
Because of what it implies. Now, you know, I would have read that, and it did end up coming true, that first circle you have in August, after that was with the yuan devaluation. To me, that's a confirmed low, and confirmed lows rarely are the bottom in the market. So it proved out to be true, even though you had a big rally. The true low came at a higher divergence level in January. New price lows, higher real simple implicator lows. So
yeah, I couldn't agree more. So I think it's a good example. So if you're wondering now what it is that I'm looking for, I think understanding where I was coming from in 2015, 2016 would really help, right? So you mentioned the confirmation. I take it you mean that we got oversold on this August decline. Is that what you're referring to? No,
not just oversold, but the RSI made a new low along with price. So it was a confirmed low. The momentum confirmed the move.
Got it. Totally. Yep. So you and I clearly look at our side similar ways. You're right. Confirmed low for sure. I think what's even more telling for me was the fact that it got oversold, because, you know, if we're in uptrend and market's making new highs, in this case the S&P 500, momentum's going to stay above those oversold conditions. You know, momentum's going to fail to get oversold. So the fact that we got oversold was another further evidence suggesting to sell strength, not buy weakness. And then when we did rally and run into that overhead supply from, you know, the rest of 2015, momentum didn't get overbought, essentially reiterating the fact that we're in a bearish range, and this is still a sell strength environment. So Here we go. We make new lows in January. Not a surprise to us at all, right? This was a short all day. And then momentum got oversold again, really confirming, continuing to confirm that we are still in a sell strength environment. But on the new lows in February, momentum stayed out of oversold conditions. So
yeah,
that was the first major sign that, hey, you know, things are different now. And we were getting long, very aggressively long, all throughout this weakness here, right?
Nice.
But we still did not have an answer as to whether this was just a counter trend rally within a bigger structural decline, or whether this was the beginning of something new. Just because we knew we wanted to get long didn't answer the question of time horizon. But then upon that rally, when we got overbought in the spring, entering the second quarter of 2016, that was warning number 2 that things were improving. Because if this was really the disaster that it had been, momentum certainly would not be reaching overbought conditions on this rally. So signal number 2 that things are getting more positive. And then sure enough, during the summer correction, momentum stayed out of oversold conditions, right?
That was Brexit.
Sure. Yeah. And not only that, but we didn't get oversold. But this was the point where interest rates bottomed. This was the point where European banks bottomed. So it wasn't just one chart that suggested, hey, we need to be super aggressively long, or hey, things have changed. It was really a collection of all of them.
Oh, the John Murphy's leaking out of you.
There it is, right? I can't help myself.
Okay, so we've had this phenomenal run now, and the recent low was the election low. Carl Icahn left the party and went and bought $1 billion worth of futures, and it's been off to the races, only consolidating. And so where are you at now?
S&Ps?
Yeah.
So I think it's pretty clear here that we've had a nice stair step higher, right?
Right.
But this is almost no longer the case, right? And
Yes.
this kind of makes you sort of question what we're seeing here.
Yes.
Listen, if we're below, if you know, I can even give it to 2,400 depending on your time horizon. But listen, we made new highs, right? Let me just take off this crosshairs.
Glaring divergence.
Glaring divergence. Momentum did not get overbought at all. So this is a problem. We're breaking uptrend lines, and you know, this resistance here, this form of resistance, this is important, right?
Is new support.
Yeah, I mean, listen.
So under 2,400, would that change the long-term picture for you, or would it take even would have to get under, say, the old highs of 2,130 for your view to change?
Oh, well, that's 2,130 still another 200, you know, 300 points lower. So from a risk management standpoint, I think that's a bit much. So yes, I suppose from a structural perspective, longer term, if we get down there, then the implications longer term, of course, could certainly change. I don't look that far ahead. So, you know, my time frame, while I don't care what happens today, I also don't care what happens next year. I'm more interested in what's happening over the next few weeks and few months, right? I'm trying to make money this quarter, right? So I like to call that an intermediate term time horizon.
Okay.
So that's kind of where I look right now. And yesterday was an ugly day, and you know, there's absolutely no question. So what we're looking for is those oversold conditions. If we start to see those oversold conditions, that's going to suggest that at the very least, we have more time of consolidation and digestion moving forward, and a more cautious stand is certainly due. So, you know, the market's going to close today, and I'm going to rip through 1,000 charts, every single stock in the S&P 500 on weekly and daily timeframes to really come up with that weight of the evidence, you know, sort of conclusion.
How long does it? You're a hardworking guy, then, JC. How long does it take you to do that?
You know, it depends on how much has changed, right? I mean, if not much has changed, I could rip through those in 2 seconds, right? I mean, not 2 seconds, but it'll be a lot quicker. If there's been dramatic changes that I need to, you know, really do some analysis and break down these sectors, you know, it's going to take me longer. I'll get it done today. You know, I'm in California, so I'll get going.
Where are you at? I'm in Temecula. Where are you at?
I am in Sonoma Valley, California.
The other wine country.
Oh yeah.
Yeah, all right. Go ahead.
So, you know, I can get going around 1:30, you know, about half an hour after the market closes, you know, get a cup of coffee, you know, throw on some good music and then just start ripping. And I go sector by sector. You know, I start with the energy stocks, you know, and then within the energy stocks, I go in my order. You know, I start with the integrateds, go to the oil services, you know, drillers, the explorers and producers. Then I'll go into financials, and then I'll start with the big guys, and then the regional banks, and then the insurance stocks, and then, you know, I'll go to the industrials, and then I'll go to railroads and truckers, and, you know, work my way aerospace and defense. So I'll go sector by sector, breaking it down sub-sector by sub-sector, every single chart on a weekly time frame and a daily time frame. I also add a few charts that are not part of the S&P 500, but I still think belong with certain groups to really kind of help me get that weight of the evidence sort of conclusion. And then, you know, once I've ripped through, you know, 1,000 or so charts, I have a much better idea as to what's happening internally, because it's not so much one index. It's what's in that index. And I find the internal process of going through all 1,000 charts much more effective than just pulling up a chart of S&P futures, you know?
Okay, so when you came on and first showed your screen, I think you were showing an oil-related index.
Energy, yep.
Okay, so this has been a laggard during the last quarter or even the whole year. I mean, we had that big low last January. And actually, I'd say that oil stocks kind of underperformed, but they're starting to look, maybe there's going to be some rotation in there. I know you're a technician. I am as well, JC, but I have a thesis that, you know, was a falling wedge last year, and the top of the wedge was 62. So I think we could get to 62 in WTI. But my thesis is that crude will hold up and maybe even advance into Saudi Arabia's IPO. That, you know, they're going to move heaven and earth to keep the price of oil up until they could bring in bag holders for their IPO. What do you think of that?
I like your conspiracy theory. You
call it what it is, but I mean, haven't you seen that in stocks where the market will get pumped up? You know, you think about like when, you know, Google and Facebook and a lot of these things were IPOs. They came public when the market was near all-time highs. I mean, that's the time to do it when the underlying asset class that you're an instrument in is doing well, not when it's doing poorly.
Listen, Dale, I'm the son of a conspiracy theorist, so I hear you. You know, I'm with you, brother, you know.
Well, you might be young enough to be my son, too. So
I've been hearing about JFK.
That's hilarious, though.
I've been hearing JFK and Nixon's theories my whole life. So, no, I mean, listen, I like where your head's at. I appreciate, you know, your optimism. I mean, that's not how I think personally. I look at this crude oil chart, and it just looks like a hot mess. I mean, it looks like how I used to wake up in the morning after college parties, you know? I mean, it ain't a pretty sight, you know?
Yeah, okay.
I think it needs some time to recover. I mean, I'm a big fan of staying away from things near a flat 200-day moving average, and we're right at that sucker, you know?
Yeah, so it's a non-trade. It's a no trade.
Listen, if I never trade another oil contract for the rest of my life, I most likely live a longer life, no?
Okay. All right.
I'll get involved if and when I need to. I know that the double bottom in early 2016 was a home run. You know, I've had opportunities in the past. Listen, I mean, it's right. I mean, this is the sheer definition of a lack of trend. So I just, you know, I agree. This looks more like a bottom than a top. You know, I'll give you that all day. But it doesn't necessarily mean that we're trending higher. I mean, it's just a clear lack of trend. So I think it needs time there.
Okay. So what else do you have for us today that is on your radar screen? What groups? I know you haven't done all your weekly work, but I'm sure you have some biases of things that you think could be decent buys on this correction in the market. Okay, so emerging market currencies?
This is, no, here we're looking at, these are industrials relative to the S&P 500. Okay. And I just see 1, 2, 3, 4, 5 tests of this level. You know,
Yeah,
Dale,
plenty.
where I grew up, you know, these are continuation patterns. You know, this is something that should resolve higher. I mean, considering how many tests of this resistance, this overhead supply. So, you know, I'm waiting for that to the upside. I think that would be extremely constructive. You look at something like Caterpillar, right?
Wow. Yeah.
You know, you have a big, nice base in Caterpillar. You know, are we going to break out, or is this just further resistance? You know, so I'm looking at these. I'm looking at these charts, and I'm saying, okay, is it ready to go? This probably looks a little extended. I'm looking at the Dow Jones Transportation Average. That has been a great leading indicator for a while. Notice how the transports peaked
earlier,
2014, 6 months before the S&P 500.
Right.
Bottomed in January, the month before the S&P 500, right? Yeah. So we want to see leadership out of these. I don't want to see, I love the fact that we have not gotten oversold at all in momentum in the transports. If we can conclude this consolidation and remain above those oversold conditions, then we can go on and move on to new highs. But if we get oversold, then, you know, Dale, that's going to be evidence that we probably still have some more digestion.
Or indigestion.
Or indigestion, yeah, right? Depends how long you are.
Yeah. Okay, so yeah, the trannies lead. Where are you at on, you know, there's a lot of positive things. You ever pay attention to what's happening in mining shares?
Yeah, the gold mining specifically?
Yeah.
Yeah, you know, I know Gunlock, Jeffrey Gunlock now, he's an avid technician, which I certainly appreciate. You know, I guess this is what he's looking at.
And
you know,
he's
looking at a textbook symmetrical triangle or whatever it is. I don't know about all that, but it does look interesting. I'm not long gold miners. I'm waiting for some more information here. I'm not completely convinced. I'd like to see a little bit more strength out of silver. You know, because Dale, that's where the crazies live. They live in the silver. So if you're going to get, if you're in a situation where precious metals are doing well, you know, silver is going to be participating. And in all likelihood, it's going to be outperforming gold.
So you keep an eye on the gold-silver ratio to give you an idea?
Absolutely. Absolutely. Okay. Look at a gold-silver ratio and then overlay it with silver over it, right? You know, they look very similar. I mean, you can even look at an SLV GLD just to, you know, keep it simple, stupid. You know, this doesn't look great.
Higher lows still, but yeah, interesting. You know, I know the crazies. I was around during the Hunt squeeze.
There you go. You know, I wasn't.
I mean, I'm a historian and a conspiracy theorist. So
there you go.
All right. So you're not seeing anything here that is telling you that silver's going to lead the way.
Listen, I'd love to, because this trade right here was one of the best trades of my entire life. You know, this failed breakdown here. I mean, this was as clean as it gets. Listen, I like partying with the crazies just like anybody else, but I don't need to live with them. You know, like some choose. I got to pick my battles here, and this was a home run. I mean, this was a grand slam, but it's been dead ever since. So, like, yeah. If you can't beat them, join them during this time here for sure. I loved being with the crazies, but the crazies remained, and they get crazier and crazier as prices approach the apex. You know, I'm just not there yet. This is what I'm looking for, Dale. Not this.
You know, you had a similar false breakdown in the euro, just like that. It took out the 104 level, 105, and went to 103, and then straight ahead. See, similar false breakdown there.
No question.
Yeah, same thing. I love those. False breakdowns are the best trades because, you, as Blake would say, everyone's wrong-footed and ready to be squeezed.
From failed moves,
like what's happening in VIX derivatives now.
Yeah, you know, they're on the wrong side. You know, speaking of conspiracy theories, one of my conspiracy theories, you know, and we've seen it a few times. Like once a month, you'll get that unwind of that short position because you got all these commercials. They're loaded up on VIX shorts, so they get squeezed out. You know, the market gets adjusted accordingly, right? Because of the positioning, because it's based on the S&P 500. So it takes it in the chin for a day or two. Everybody gets squeezed out of their position, and then the market continues, and volatility gets absolutely destroyed. So we've seen that happen again and again and again for months. is this month's version of that, and now we can continue and VIX gets slaughtered? Or is this the start of something new?
I mean, I think it's different. It broke out of a wedge once we cleared, I don't know, about 14.
Yeah.
So, I think it might be different this time. How about a reversion to the mean anyway? Like, the VIX in the 20s. It's not, it used to be normal, 15 to 25. And this was subnormal.
Yeah, I'm not a VIX technical guy. Like, I don't like drawing trend lines on VIX or anything like that. I'm more of
only conspiracy theorists draw trend lines on VIX. But you know what? I wanted to bring this up. You had a great
if it fits your narrative, right?
Yeah, if it fits my book, if it's with my book. You had a great event about 4 or 5 months ago called the Chart Symposium. How did that?
Chart Summit.
Summit. Okay, Summit. Yeah. How did that go?
It was unbelievable, Dale. I mean, you can look at the presenters here. Really what it was. I get invited to do, all these like webinars and stuff like that all the time. And, I found myself getting invited to some of these webinars, and, they were just, some of the presenters were just terrible. I mean, it was just, it was an embarrassment. The fact that, people would even sit there watching some of this stuff. I mean, I kid you not.
And I've interviewed a lot of these guys.
So then I was like, you know what? I could do this much better. Let me call up some friends and see if we could put something better together. And to be honest with you, I didn't think they'd all say yes, but they did. So it turned into, this. And, we had over 10,000 people, 100 different countries all over the world. I got 500 emails from people thanking me for putting this together. And honestly, I would have done it if I was the only one listening, because, I've learned from all of these people. Brian Shannon, talk about false moves. This is Mr. From failed moves come fast moves in the opposite direction. Phil Perlman, Dr. Phil, legend. He's just awesome. Charlie Valello, great work. Krinsky,
he's a psychiatrist too. I think Phil is also a licensed psychiatrist, so he probably helped you out.
He's a shrink. He's always psychoanalyzing me. we're having beers, and he's like checking me out. Oh, and they're off.
You're just missing one guy there, Mr. 3 Drive.
There you go.
That guy Pinkert.
There you go.
Maybe for your next one.
We'll get you on this year. What do you think?
Yeah, I'm game. I like both sides of the microphone. I'm a Gemini.
There you go. You understand that Chart Summit is January the 27th because 1.27 is the square root of 1.618.
You know what? Besides being a great technician, I really had a blast talking to you today, JC. It was worth everything you put me through to come.
I doubt it was so bad.
for you to come on and join us. So, I'm very glad to have met you. Glad I reached out, and thank you so much for your time and your edification. And you know what? I even learned some new things how to use RSI.
There you go.
This talk that we had. So, like to call you from here on out my trading warrior brother, JC Parets. Everyone, thank him. Have a great weekend ripping through your charts, JC. Open a bottle of red, and maybe one day we'll get together and raise a glass together.
Oh, I'd love to do that. You're down in Central Coast?
No, I'm just outside San Diego in the wine country, Temecula, California.
Oh, so, I didn't know there was a wine country. I guess it was
there are vineyards here all over the place. So
cool.
It's kind of like paradise here in Temecula. It's not the ocean. But I'm telling you, I get ocean breezes 20 miles inland. It really.
I love it. I'll be down there in October. I'll definitely make sure to reach out.
All right, JC. Have a great weekend, and I hope that profits rain down on you and your subscribers the rest of the year.
Likewise, my friend.
Thank you, JC.
All right.
Okay, everyone. Thank you, F.A.C.E. Hope you had a great week, and we'll see you on Monday. And remember, don't just count your pips, count your blessings. Thank you very much, Arif. Thank you, Blake. Thank you, Steve. Have a good trip, Steve. Thank you, Stelios, Grega, Nick. Adios, my trading warrior brothers and sisters. Enjoy your summer day.